It's been a morning of downside pressure for the base metals here on the floor of the London Metal Exchange, and although some of that pressure has abated somewhat going into the afternoon, all the metals are either at fresh multi-year or fresh multi-week lows, given the sell-off that we saw earlier and that carried on through the early part of the morning. So in the case of the copper market, it traded as low as $66.13 a tonne. That's the lowest since July 2010. Down 3% on Friday when the market was closing constructively above $6,800. Likewise in aluminium, market there fell to 1772.25. That's the lowest for 4 years. Again, the reasonably constructive close on Friday wasn't followed through. In lead and in zinc, we've seen prices of those metals hit their lowest for around about a month. Nickel too has come under pressure, getting very close to last week's multi-year lows. So the reasons for the decline, well, they were kicked off by China. The stock market there fell heavily today, down around some 5%, and that's against the background of the Chinese government seemingly cracking down on credit. So that's all undermined sentiment that was already looking fairly shaky after last week, and the US Federal Reserve seemingly hinting at reining in some of the monetary stimulus it's been embarking on for the last few years. Base metals, risk appetite is leaving them, as it is in other commodities. So you've seen the dollar push higher today, euro got to its lowest for around about a month, so all this pressure came onto the base metals, prompted the selling, prompted the liquidation, hit some sell stops along the way. For the rest of the day, there is a little bit of downside stability coming in, not too much it has to be said. There's no key US data today, and in fact it's a light data week, so it looks like this pressure that we've seen to kick off the week is probably going to carry on through the coming days. This is Martin Hayes of Fast Markets on the floor of the LME.